I'm Corbett Wall with DB Auction, here with your feeder flash for Tuesday, December the 14th, brought to you in part by Witex Corporation. More than just tags, Witex provides livestock producers with excellence in animal health. For more information, go to y-tex.com. Light trade, lower prices. We had the lightest trade, negotiated pure cash trade last week in our 5-area feeding region than we've had since the last week of September, and so we saw lower prices in turn with that. And you know that for the last couple of years I've been promoting and trying to push some type of a bill that would ensure a minimum requirement of negotiated cash trade. Why? Because it promotes more competition. Your few guys that sell cash cattle every week, they could wait for the packers to come to them. The packers could bid them, and then they wouldn't necessarily have to take it or not be called again for 2 or 3 weeks. They could sit back and say, well, let me think about it, or they could ask a higher price like a normal negotiation would be, and then haggle back and forth. That's the way you get higher prices. But we see a big push against that. We've got that compromise bill, which was the kind of the compromise between the 5014 bill that Chuck Grassley introduced, and then the Cattle Market Transparency Act that Deb Fisher had put together. And we've got a compromise bill now. RCAF has rejected it. NCBA will not push it either. That they don't want to be in favor of it. Although, don't forget, NCBA coming up in February, they're going to be having their convention, and they are going to have to get some of their people together and do a vote, because if they do what they say they were going to do, they're going to have to get behind something regulatory or legislative to push packers for more negotiated trade. We've tripped the triggers. We've done that 75% of a robust market thing, and they tripped all the triggers enough times where now, if they do what they say they're going to have to do, NCBA is going to have to promote and push and aggressively try to get some type of regulatory action or legislative action that is going to force packers into more negotiated trade. So why not just get behind this compromise bill? Been working hard for it for a long time here. It's ready to go. It's not too aggressive. It's aggressive in the Midwest and Iowa. It's going to push negotiated trade to higher levels in the Southern Plains, which are struggling to have barely any trade at all. And so why not get behind that? And indeed, likely they will. But they just haven't yet. But we are going to continue to remind you people this, and as NCBA convention gets here closer, we're going to see what they decide to do about that, and see if they come up with their own bill, if they're going to get behind the compromise bill, or what they're going to do. Now, you guys may think, well, we're never going to get that compromise bill or anything else that has minimum negotiated cash trade in it, because I mentioned last visit that they had pushed through the Cattle Contract Act, Library Act, and with the extension of mandatory price reporting. And so if they would have took the compromise bill, if they were going to do something, well, I got to tell you about that. And we visited about that last weekend at the United States Cattlemen's Association's annual conference. And what got passed last week was in the House. The House and the Senate are two different parts of Congress there. And you know this. Well, the Senate is where the rubber meets the road. Well, we've got all the push for this compromise bill in the Senate. If the Senate would pass that, if it gets introduced and passed there, then it will be a pushover to go in the House. Just because something goes through the House does not mean that it's going to go through the Senate by any stretch of the imagination. So we're still in there, and the lengthening or extension of mandatory price reporting was only up through September. So if we can't get one of those negotiated bills hooked onto it here this year, which it's getting pretty late, we think we can get it done through the year next year. So, and I know it's a frustrating, long process, but if we don't get one of these negotiated cash minimum mandates done, then we're done here. I mean, we just go by the way of the hogs and the chickens, and we'll just it'll just be kind of a fast thing. They've really sped up the amount of vertical integration and the lack of cash trade here in the last few years, and we will just lose all of it here. And basically all of your feedlots are just going to be contract growers for your big four monopoly of your beef packers there, and it won't be too awful long after that, whenever you get ready to sell your feeder cattle or calves, there's not going to be hardly anybody there to buy them. And I know a lot of you cow-calf producers and guys, you think, man, that fat cattle trade, that's a long ways up the line. Well, wait till the day that you pull up to the sale barn and there's one guy sitting in the seats with an order for your calves or feeder cattle. That's what we're trying to keep from happening, guys. But like I said, last weekend at the U.S. Cattlemen's Association, had a great meeting there, had people there from all over the country. Not a big crowd, but the crowd was pulled back a little bit by the winter storm that come through there and dumped about 10 inches of snow in the general area there, and there's some ice. But had people there from New York, North Carolina, Arkansas, Tennessee, even out west too, from Oregon and all over East River and West River, South Dakota, and all over the Midwest down into Nebraska and places like that. But had a nice crowd there and had a good conference there, and we're still pushing for things to try to save this industry. But let's talk about your board for Monday to start the week out. It was higher. Who saw that coming? But it just come out higher. December live cattle futures are up just 10 cents at 136.95, but who would have thought they'd have been on the plus side? February was up 77 at 138.85. All your back months were higher and pretty level on the gains there, from up 40 cents to up 52. January feeder cattle up 65 cents at 165.52. March was up $1.17 at 166.47. You go on your back months of feeder cattle, they were all up too, from up 20 cents on your farthest out traded contract to closer by, and it was up $1.37. You think, well, corn would have had to have been down big. Well, December corn was down 4 1/4 cents a bushel there at 5.84 1/4. That's still working towards $6 there, and that's really going to scare things if it does indeed hit $6. But not down enough on the volatile grain markets there to cause your cattle to be that much higher. Your beans were down big though, down 23 3/4 cents a bushel there at 12.44. They're going to have a big bean crop there in Brazil, and that was the main reason for that. But your Dow Jones Industrial average was down big, 320 points on Monday to start the week, and that pulled almost all of your grains down except for Kansas City wheat, which has a mind of its own. Let's talk about your weighted average on last week's negotiated pure cash sales in your 5-area feeding region. Like I said, the lightest trade we've had in your 5 areas since the last week of September is 55,900 head. Compared that to the previous week when we reached the highest point we'd seen in years was 97,400 head. Same week a year ago was only 47,900 head. Your live sales of steers and heifers in the 5 areas, 134 to 142. There was only 340 head at 142. Pretty much one big deal there in Nebraska. And there was only 128 head at 134. Most of your live sales of steers and heifers last week was from 137 to 140 with a weighted average price of 139.69, and it was heavy on the 140. But that weighted average on live steers was down 75 cents from the previous week's weighted average. dress sales, and there were a lot more dress sales than there were for the last few weeks, but 217 to 221, and your weighted average on dress steers was 219.71. That was down 26 cents from your previous week, and not big losses on even on your weighted averages there, but we killed the rally. The basis just got too big. The difference between your spot December live cattle futures and what cash was, it just got too big. It got too easy for your guys to just pull the plug on their hedges and take the lower price, and they ended up bottom lining higher than what they would have the previous week. But we've lost the ground in our cash market. We're not likely to get that back between now and the end of the year, especially when you look at your nationwide negotiated sales, only 66,600 head, but 21,250 of those were for the 15 to 30 day delivery. They've got the holidays lined up just like they want to. They're going to have lighter kill. Looks like they've got plenty of cattle to get through there. They've got this thing kind of lining up like they want. And the packers were really saved by the holidays on their margins, because they stopped the higher prices on fat cattle, and because they've been bleeding a bunch on your box beef cutout values, but they're still making, $350 to $400 a head, which is more than probably any of your fat cattle guys are making right now. But 32% of those negotiated sales nationwide were for the 2 to 4 week delivery. Negotiated grid, your packers turned in 44,000 of those. Same week a year ago was only 30,800 head, and that's the way they'll try to get around the negotiated grid, and they're going to try to get around anything that you mandate them to do to cause them to compete against one another. But we're just hoping that we can get some things pushed through, and hopefully we get some rules in there, and your auditors with the USDA will come in there and enforce those rules, unlike the P&S Act that we stopped enforcing back in the 1960s, which is why we've got ourselves in this mess anyway. But your formula trade last week, 249,000 head. But box beef cutout values were mixed, with choice cuts down 132 at 263.22, selects up $1.40 at 253.64. Talk about what else is going on. A lot of replacement specials here around the end of the year. We're thinking that some diversified producers, they would rather buy some replacement stock than show that they made any money, if anybody did make any money this past year. But they might want to come in there and buy some bred heifers or bred cows. But a lot of replacement specials from now till the end of the year. And check your schedules, guys. We've got them everywhere. Joplin's got a big one, about 2,000 head on Wednesday afternoon. Bassett, Nebraska's got a big one, 3,000 head plus. Some of the fanciest cattle you see anywhere. Bred heifers, young bred cows, a lot of dispersals. And that's going to be on Wednesday also, starting in the morning there. But guys, get in there. This replacement stock is going to get higher. We are on the downtrend of a supply cycle, and we have slaughtered a lot of beef cows, and we've whittled our herds down, and these things are only going to get higher, even if the market doesn't get any higher or doesn't even keep what we've got now, because we've really trimmed our herds down to nothing. And if you guys can get in there and find some stock that you like, try not to blow your brains out whenever you buy them, but you want to get some stock, because having some cows around is going to be pretty good property for at least the next 3 years or so. Beaver County Stockyards advertises here with us, and we promote them. They do a really good job. They're up there in the Oklahoma Panhandle on the eastern side, but Jeff and Jerry Slatton kind of run the day-to-day operations around there. They have a sale every Tuesday. Cattle coming in there every week from 5 different states, and people hauling them in there from a long ways away, guys. Several hundred miles to get them into that market, because they've really established a really good market there. And whether you're selling calves or yearlings, or looking for some to buy, you can get onto dvauction.com, view and bid that sale every Tuesday there in Beaver, Oklahoma. How about your feeder cattle markets for Monday? Real-time index on DV auction late in the day on Monday sitting at 160, 117, off a little bit, not a bunch, but off 15 cents from the end of last week. And like I told you, I figured most of these Monday sales would be steady to a little bit weaker, and that's exactly how they were. Oklahoma City, Oklahoma National Stockyards, 15,000 head. Last sale of the year for them, feeder cattle sale. Then they're going to be closed after their Tuesday and Wednesday sales with odds and cows. And then they won't be back running until January the 3rd. But calves sold steady, except for the Pee-wee heifers weighing in the threes, and they were $6 to $8 higher. But you know, whenever you get some of those, they can go with one way or the other. When they're that light, those big trends don't mean that much. But not many of your heavier weight yearling feeders to sell, even in Oklahoma City. And people bring those in there from Arkansas, North Texas, everywhere. That just tells you there's no yearlings left, guys. And so didn't have much of them, didn't have enough to even test the market. Had some bigger feeder steers, or I say bigger, weighing in the sevens, and I'm sure these were long-time weans, but a stick-out deal out of Oklahoma City with National Livestock Commission. 62 head, 749 pound steers bring 171.50. Joplin Regional Stockyards had almost 10,000 head, 9,900. They underestimated. We're only expecting around 8,500. People want to get these cattle moved before the holidays. Steers were steady to $3 higher. Heifers sold steady. Russell Livestock in Russell, Iowa had 4,300 head there, and compared to 2 weeks ago, of course they didn't really recognize that big gain that we saw the previous week, but their feeders sold as much as $8 higher than 2 weeks ago, which was their last sale. Stick out deal on them, 70 head, 794 pound steers. Now that's getting pretty darn close to 800 pounds at 168.75. Few other top quotes from around the regions. Faith Livestock Auction in Faith, South Dakota, lightest sale they've had in a long time, partly due to weather, I'm sure, but also they've just about sold all those calves. 98 head, 509 pound feeder steers, or little steer calves, I guess. They bring 211. How about Aberdeen Livestock Sales? Aberdeen, South Dakota, 63 head, 638 pound steers bring 184.75. But the best quote that I saw anywhere on Monday, and your Zach Tran top quote for the day, come out of Sioux Falls Regional Livestock in Worthing, South Dakota. That's on the east side, guys. 56 head, 1,001 pound steers bring $160. Now, I'm not a mathematician, but that's getting pretty close to $1,600 per head. You take those to 1,500 pounds, I'm sure they'll take them heavier, but if you just take them to 1,500 pounds, that'd be 500 pounds. And you sold those at $1.40, which is today's market, that'd be $2,100. So you need 500 pounds to get them there at $1 cost of gain, you break even. That's your feeder flash for Tuesday.